Welcome to Heart of Economy. Today we are diving into a critical development that could shake the future of the global economy and instantly shift the direction of financial markets. Donald Trump has announced that U.S. forces carried out a second military strike near Venezuela, and he delivered a stark message to the world. Be warned, we are hunting you. This is not just a clash at sea. It's a move that could send oil prices soaring, reshape the strength of the US dollar, and disrupt global investor confidence. The real question is this just a short-lived show of power, or the beginning of a new economic storm? Let's break it down step by step. At first glance, the second strike near Venezuela might look like a simple security operation, but for the markets, every military move carries a much deeper meaning. Financial markets don't hear the sound of cannons, they feel the shockwaves of uncertainty. And uncertainty is the single most dangerous factor for investors. A missile striking offshore waters is not just a military action, it's also a blast that rattles stock exchanges. History gives us countless examples. When the Iraq War began, oil prices surged 25% in a matter of weeks. In Libya, during the 2011 conflict, Brent crude jumped nearly $20 in just a short period. Now, Venezuela makes the story even more sensitive. Nicolas Maduro's government has been at odds with the US for years. With this strike and Maduro's fiery response, investor psychology has entered a new zone of doubt, and markets hate doubt. Here is my take. If this tension keeps escalating, Wall Street investors will rush out of equities and move into safe havens: gold, the US dollar, and treasury bonds. It's a reflex we've seen again and again. When risk rises, capital seeks protection. Now let's focus on the heart of the matter. Venezuela holds the world's largest proven oil reserves. On paper, this nation could reshape the balance of global energy. But years of sanctions, political turmoil, and economic collapse have kept that potential locked away. Trump's words, combined with direct military action, bring Venezuela's oil cart back into the spotlight. Why? Because every geopolitical conflict injects a risk premium into oil markets. Investors don't just price today's production, they price the possibility of disruption. History reminds us of the stakes. During the 1973 oil crisis, political conflict in the Middle East didn't just raise prices, it threw the global economy into recession. While today's scenario is not of the same magnitude, the logic is identical. Supply risk equals price shock. If US-Venezuela tensions escalate further, Brent crude climbing to the $90-$100 range would not be surprising. Every missile strike reinforces the perception that Venezuelan oil may not reach the global market. And here's my personal view. Trump's campaign against Venezuela is not only about cartels. It may also be about weakening Venezuela's energy leverage. The US remains the dominant player in global energy, and Venezuela is one of the few countries with the reserves to challenge that dominance. So how does this play out of the US economy? This is where things get tricky. On one hand, the dollar could strengthen. In times of global stress, investors always flock to the greenback. But on the other hand, rising oil prices feed directly into US inflation. Gasoline costs rise, transportation becomes more expensive, and higher production costs ripple through industries from agriculture to manufacturing. This puts the Federal Reserve in a new dilemma. The Fed is already forced to keep interest rates higher for longer. If energy prices climb further, any hope of near-term easing could vanish completely. The equation for investors becomes clear: a stronger dollar, persistently high rates, and weaker consumer demand. History backs this up. In 2008, when oil prices surged to $140 a barrel, the US economy fell into recession. That crisis had multiple causes, but the oil shock alone carried enormous weight. My view is this: If the Trump-Venezuela conflict drags on, US inflation could flare up again, and the Fed would have no choice but to stay hawkish. That means pressure on stocks and a heavier cost of living for American households. Let's add another layer to this analysis by looking at what leading economists have said. Nouriel Roubini, nicknamed Dr. Doom, has long warned that geopolitical shocks are among the most dangerous triggers for financial instability. Every conflict, he argues, creates chain reactions across markets. Larry Summers has repeatedly sounded the alarm on inflation. He says the US economy is still under inflationary pressure. If oil spikes higher, those pressures will multiply, making the Fed's challenge even harder. And Paul Krugman often emphasizes investor confidence. In this view, psychology can shift faster than fundamentals. Even a strong economy can falter if investors panic, and conflicts like the erode confidence quickly. Together, these economists point to one truth. Venezuela's crisis is not just a Latin American issue. It has the potential to ripple across the fragile balance of the global economy. So what does all this mean for investors? On the risk side, higher energy prices, rising inflation, and a hawkish Fed could weigh heavily on equities. Tech stocks, in particular, would likely suffer under this pressure. But there are also opportunities. Gold, the timeless safe haven, tends to shine brightest during geopolitical crises. Defense stock often rally when military tensions rise, and energy giants like ExxonMobil and Chevron could benefit if oil prices continue to climb. Here's my take. This situation is both a threat and an opportunity. The key lies in whether the conflict remains a short-term show of force or if it escalates into something deeper. If it is just a warning shot, markets may recover quickly, but if it escalates, the months ahead could bring far more turbulence. As we've seen, Trump's strike near Venezuela is far more than a military move. It could reshape global energy flows, fuel US inflation, and shake investor confidence across the world. A missile doesn't just destroy a vessel. It can hit oil prices, the dollar's strength, and the heartbeat of global markets. So what do you think? Is this just a temporary shock or the start of a new economic storm? Share your thoughts in the comments. And don't forget to subscribe to Heart of Economy and turn on notifications. Because here we don't just report events, we uncover the heartbeat of the economy. See you in the next time.